requested the industry to think about
Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street, especially with the benchmark index moves, the sectoral indices and also some of the top stocks that have been buzzing in trade as well. We'll also get you expert views as to how should you be approaching your investments in this current volatile market scenario. But first up, a quick check on how the markets are trading at in the last half an hour of trade. Well, when we talk about the Nifty and the Sensex, they're both hovering above the flat line, although just flat with a positive bias at 16,973 for the Nifty, 57,583 for the Sensex right now, up about just about 26 odd points. So the markets have been increasingly volatile throughout the trading session after showing a gap down opening in trade today. But you can actually see the markets have been hovering near the flat line itself. When we look at the other factors, say for example the broader markets, the mid cap and the small cap 100 indices, you will be able to spot the kind of move that we are seeing there, especially with the mid cap 100 index. That's also absolutely flat right now. It did move up in trade throughout the first half of trading session, but is now absolutely flat. The small cap index down by about 0.6%, so that's where the bigger beating is being seen. In terms of the other sectors that you can actually spot, most of the sectors have actually come into the green spot, and that's like a slightly breathing space that you can spot, especially the Nifty bank that's moved up in the green space, with especially the PSU banks 0.5% up in trade today. Financial services 0.2% higher, although the private banks still remain in the lower zone as well. Realty pack has improved a lot as well, 1% uptick for that one. Apart from this, you're also seeing gains coming in on the pharma pack as well, 1% gain for that one too, 0.5% kind of gains you can actually see for the FMCG pack. In fact, it's up by 1% now, and the auto space is also moving higher by 0.2% on the upside. The market breadth looks largely divided, with 26 advances to 23 declines at the moment. Some of the gaining stocks include BPCL, Nestle, Asian Paints, Titan and HUL. So the laggards of FMCG yesterday are seeing some shots getting covered. When you're also looking at some of the metals pack, they are dragging today. Hindalco, Tata Steel, JSW Steel down by 2.5% to 5% even, and IndusInd Bank and Infosys are the other laggards at this point in time. Time now to welcome our guest on the show. Mr. Vijay Chopra joins in. He's the MD and CEO at Enoch Intermediaries. Welcome, Mr. Chopra, and thank you so much for taking the time out for this discussion. Well, first up, I wanted to take an outlook on the markets for you. We've in fact seen about 10-12 days or sessions where we've seen the markets having a negative close. Of course, fresh worries emerging from across the globe, including the US financial crisis and then the Credit Suisse crisis as well. Although the stock of Credit Suisse on the Swiss exchange has rebounded sharply by about 40% as well, but concerns largely remain as to what really can impact the Indian markets or Indian financial system with the kind of ripple effect that we are seeing across the globe of this financial crisis. How are you really viewing this entire crisis unfold, and what implications do you believe one can look at for the Indian markets?
So thanks, Sakshi, for having me on the show. So there are various questions you've asked. Number one, what is the global situation looking like? I've been in the markets for over 3 decades, and I've not seen so many big banks going bust in such a quick succession. It's just 3-4 days, and we have seen large banks coming to the brink, including the big European banks like Credit Suisse, and yesterday we also saw BNP Paribas cracking a lot. So definitely there are fears around liquidity. There are fears around banks going bust. Some of them have gone bust in US, and then we see some European jitters as well. Credit Suisse has raised some capital, about 54 billion odd euros. But again, I think that is it enough? So my view is that it's better to be conservative in these times rather than being aggressive in the market. So be conservative. If you have cash, conserve it for some time. Let the dust settle. One more thing I would like to mention that since almost October 21, we are in March 23. So since October 21, we've been seeing all these jitters, and time and again we've seen a war, we've seen the pandemic, we have seen interest rates being tightened, we have seen banks going bust. So a lot has already happened. So my sense is that there might be a downside, but again, the upside seemingly is much higher or much bigger than the downside. We might see some few hundred points on the Nifty down,
Okay.
but yes, I don't think that there's going to be a huge cut from here. So most of the things are discounted, provided things don't go wrong from here. So I would recommend to be conservative in such markets.
Okay, and what about the banking space? Is our banking system vulnerable to any kind of a shock, either from Credit Suisse or any of the large banks that we've been seeing failing?
Well, I think that Indian banks are quite regulated, number one. Secondly, they are having some kind of an immunity from all these international banks. The problem was with the Adani group, and that also came on 25th of January, and I think that it hasn't gone as yet. But yes, we have already seen those jitters, and there were issues related to LIC and SBI specifically, and few other banks where Adani had exposure. I think that more or less it has been sorted, and I think that we'll see the market settling down very, very soon.
Okay, and what about the IT space as well? Since IT also has about 40% revenues goes into the banking and the financial services sector, is that also vulnerable at all?
Absolutely, it is vulnerable. So it is BFSI problem. That's number one. Secondly, most of the IT spends happen when the economies and the companies are doing good, because this is further expansionary in their outlook. So if companies are not expanding, if they're not spending more on IT and new technologies, this means that they are very, very conservative. We have already seen that the IT pack has already corrected 30-40% most of the stocks from their highs in the last year. So I think the dust should settle down soon, and probably IT would be a great sector to be in. But again, I would not recommend it now. Probably few days down the line when the dust settles, that would be a great time to get into the Nifty 50 or the big companies, the top 4 5 companies in IT.
Right. So, there are, views that most of the experts believe that this will not be a repeat of 2008. On the other hand, we are seeing constant dips in the markets. How would you really view March 2023 in hindsight when we are 6 months down the line? Would this emerge as a great buying opportunity for investors?
Well, I think that India definitely is in a sweet spot. If you look at the current account deficit, it has been decreasing. We have seen, the natural gas prices from $9.50 to about $2. We have seen crude sliding from 125 to almost 75, 76. So it is a good news for Indian subcontinent, because we are net importers of energy, and these energy prices have troubled the entire world. But I think that it is very good for India. The current account deficit or the Indian balance sheet, so to say, would look much better. So banking, yes, could be in problems for some time, and we might see jitters in the banking and the NBFC space. But yes, over a period of time, if say 6 months down the line, I see that India would recover the fastest in the world, because the fundamentals would be better. We've seen GST collections going up regularly, more than 1.5 lakh crores every month, and we've seen direct tax collections going up. The crude is coming down. The Indian balance sheet, so to say, is looking better, and with the kind of push in the budget, about 10 lakh crores on infrastructure. So this spending would start April onwards, and we'll see a lot of action happening in the Indian economy.
Sure, absolutely. Apart from the crisis, we're also looking at how the top mutual fund houses are actually doing a churn in their own portfolios. So let's get down to discussing that. Even as the markets have been extremely volatile, a lot of churn took place in the top 5 mutual fund houses of the country, where we actually spotted some trends that most of these fund houses, they added stocks like Reliance Industries, HDFC, Indigo. These were some of the top additions, whereas some of the stakes were paired for most of these fund houses in stocks like ICICI Bank and Bank of Baroda as well. Now, to understand with each fund house, what did they buy and what did they sell, and perhaps what should that mean for you as an individual investor, is what we are going to now focus on. Mr. Chopra, let's start off with SBI Mutual Fund. Now, when we look at the data churn that they have done, they actually bought, this is the India's largest mutual fund house, and it bought Tech Mahindra, Indigo and Divis Laboratories and also Zomato among a few other stocks in February, and some of the major reductions were in fact in the banking space, SBI, HDFC Bank, Axis Bank. Your thoughts on the kind of churn that you've seen for SBI mutual funds, and what should be the takeaway for investors here?
Well, if SBI is cutting down on SBI, so they know the internal situation better, much better than me and you do. So, as I said earlier, I would, wait for some time to actually latch on to banks and, get these banks in the portfolio. Frankly speaking, we have bought for our clients, SBI when it went down to 490, 500 around these levels, but the SBI hasn't moved much. So, I think that, getting stocks like Tech Mahindra is a good idea. And, the IT pack, as I said earlier, has corrected quite a bit, and these are large companies. Whether it's HCL Tech or Tech Mahindra or Infosys or TCS for that matter. So I think these are good inclusions. So Tech, for that matter, is Tech Mahindra is a very good inclusion, and I think that if this stock starts moving, it might take some time. It might go to 1500 from here.
Okay. Let's now talk about ICICI Prudential Mutual Fund. Now, the stocks that they have added, or what were their top buys in the month of February, were Equitas Small Finance Bank, also PVR, amid all this news of mergers and the kind of sales they are reporting even in their F&B business, Coforge, Info Edge, Reliance Industries and SBI Life. These were some of their top buys in February. On the other hand, they reduced stake in their own bank again, ICICI Bank, ITC and TVS Motor. And Piramal Pharma was in fact a new entrant in ICICI Pru Mutual Fund. How do you spot these opportunities?
Well, I think that Reliance has been a common thread. If I see most of the funds that they have got into Reliance definitely is at very convincing levels. Looking at the kind of performance the stock and the company has shown, I think that it has done phenomenally well. As far as PVR goes, we've seen the onslaught of COVID, and due to that, we didn't see many movies coming, because most of the movies which were happening are on OTT. So I think that in the coming year we'll see a many movies coming in, either from Bollywood or Hollywood both. So I think that there's a lot in store. So PVR also is a very good inclusion according to me, and they should do well in the longer term. As far as Equitas Small Finance Bank goes, I think that it is not that a great buy at these levels. If at all you want to buy, there are bigger banks you can buy.
Sure.
But yes, stay away from banking for some time until this dust settles. I'm saying that time and again. Maybe 2 weeks, 3 weeks down the line, or maybe a month down the line, these banks would look much better. So get into HDFC Bank, get into an ICICI or an SBI.
Yeah, okay. So HDFC Mutual Fund has a lot of linkages to what you were also saying, that HDFC Bank has been among their top buy in February, for example. ICICI Bank they have bought, Titan they have bought as a fresh shares as well, and Dixon Technologies they've also added exposure there, while they have reduced exposure in Equitas Small Finance Bank right here. So you actually see two of the top mutual funds right there really having a different approach to the same stock right there. Ashok Leyland, they have reduced exposure, and Federal Bank as well. HDFC AMC has also completely exited Keynes Technology. However, it has freshly bought in the month of February Kajaria Ceramics and Tata Chemicals as their new stocks. About this basket, Mr. Chopra, any thoughts?
Well, I think that Kajaria Ceramics particularly looks good. The reason being that I think that from here the interest rates are going to either plateau or start coming down. And once this starts, the entire real estate pack would start performing very well. Kajaria, Cera, these are great companies to have in a portfolio with a longer term. They have consolidated very nicely. And if at all we see an uptick in the overall home sales, which are already witnessing, and once the interest rates start coming down, I think it would be a boon for the real estate sector and the allied sectors. So companies like Kajaria, companies like Green Panel or Green Ply, all these companies which are primarily based on real estate should do well. Also, the government has such a huge spending lined up in the infra space. So definitely, companies like Ajaria Ceramics or Serra, they should be benefited with the kind of infra push. So there's a lot of things which are going to be built in India.
Okay, okay, understood that. Let's now move on to Nippon India Mutual Fund as well and see what they really added and sold in the month of February. So Nippon India has increased the exposure to Syngene International, HDFC Bank, which is again a common one between HDFC Mutual Fund and Nippon. Keynes Technology, they have increased the exposure. ICICI Bank, Avenue Supermarts, these are some of the stocks that they have added or increased exposure in the month of February. However, the top 5 holdings also for the mutual fund include HDFC Bank, ICICI Bank, Reliance Industries, Axis Bank and Infosys. On these stocks, any insights to share, Mr. Chopra?
As I said earlier, if you want to be in the tech space, be with the top 5, 6 companies. Because whenever we see a downturn or a major correction, the large caps start recovering fast. So, as I said, Reliance seemingly is at a very mouth-watering level, and no point of being in companies like Keynes Technologies, because when you have a promise here with an Infosys or a TCS which can run much faster and the much stabler companies and with wonderful cash flows as well. So these companies would be the fastest to come back. So as a sector, I think that once the interest rates start coming down, real estate or the two-wheeler segment, Bajaj Auto looks good. All the interest rate sensitive should start doing well. Even banks, for that matter, would start doing well once the interest rates start coming down, because the chances of default are going to go down considerably once the interest rates start coming down. So I think that my sectoral picks would be somewhere around technology, pharma.
Okay.
And if you're talking about Syngene, I think that you have a much better opportunity in a Dr. Reddy's or a Cipla, or a Glenmark, or even an Oro Pharma, which is coming up very nicely. Syngene is primarily research based, and until Biocon doesn't work well, I think that Syngene is a sister concern and a group company. It won't do wonders. So there are possibilities that a Lupin or a Glenmark or a Sun Pharma would do much better than a Syngene.
All right. And the last mutual fund that we're going to be discussing and the churn in their portfolio in February is Kotak Mutual Fund. Now, Kotak AMC added shares in Sundaram Fasteners. This is a new one that we're discussing in this realm right now. ICICI Bank, again a repeat. Info Edge has also been a common one between one or two fund houses. HDFC Bank, another common name. Coforge has been a common name. These are the names that they've added in February. Sundaram Fastener has been a new entrant for Kotak Mutual Fund, and the fund house has completely exited Sapphire Foods. Your thoughts, sir, on the stocks that we've discussed today?
Yes, I think the Sundaram Fasteners, Sundaram Clayton, these are good companies. These are TVS group companies, for the benefit of your viewers. And primarily, I think that these are great auto ancillaries, and they've been around in business for a long, long time. And as I said, once the interest rates start coming down, all the interest rate sensitives, including auto and the allied sectors, will start doing very well. ICICI Bank, as I already said, that once the dust settles down, I think that it would be a great buy.
Okay, so overall we've discussed all these top 5 fund houses and the way they have approached some of the stocks right here. But for the young investors, who entered the fray just about 2-3 years ago during the COVID-19 pandemic downturn, for them this is a very, very difficult time, and they've been witnessing extreme volatility in the markets. Now they are looking for some inspiration and guidance as to how do they approach their investments. Some of the stocks that they got into have turned out to be exceptional performers, but perhaps in this downturn they are feeling stuck in those. What would your guidance be to all those investors? How do they really look at their portfolios, the way that they should make changes if at all is needed?
Sakshi, in whatever small wisdom I could gain in all these years, and market is a great teacher for all of us. What market has taught is that you chase value and not valuation. The problem with the new age investors and the youngsters is that they run after frenzy, they run after valuation. And, without going into the details, I think that, it's all about patience in the markets. So choose companies which have wonderful cash flows, preferably zero debt companies, and, having a futuristic business. I'll just give you one very small example. Long ago, I think 3-4 years ago, people were discussing City Cable Hathaway Cable, companies like this. And I know I mentioned that in
Yes.
some of the channels that, this is a dying business model. So why to get into a city cable or a Hathaway Cable which doesn't have a future? So look
Sure.
for companies, look for business models which have a futuristic possibility and growth possibilities. And I'm sure that if you run after value, in the long run you will make huge amount of money, huge amount of profits in the market. Don't run after valuation. Look at the price to earning, look at the book value, look at the ROE, ROC. These are basics of stock market. It is very it is imperative to look at the basics of any company. Look at the management as well, and the track record of the management. There are times when people do not touch upon these areas. Management is has a bad track record, and then you get into that company, and then you make a hue and cry that I've done a mistake. But
Sure.
definitely it's a mistake. So it's better to do the homework before investing the first penny.
Absolutely. Well, thank you so much, Mr. Chopra, for being with us on the show and sharing all these wonderful insights with all our viewers as well. And great line, choose value over valuation. That's the way you should really approach your investments at this point in time. Well, when we talk about the markets right now, they're slightly up. Maybe they must be about, we can look at about 9 minutes to go for the markets to shut shop. But it looks like, looking at the current levels, that there is an effort from the markets to snap the 5-6 days odd kind of a downturn that we've been seeing. 128 points up for the Sensex, 57,685 the current level. The Nifty is hovering around 17,000 with a 25-point gain. But we'll have to keep an eye out on the last few minutes as well. So do stay tuned with us onto Business Today TV. Don't forget to subscribe to this channel, and you can also continue to engage with us through our other social media platforms. That's Facebook, Twitter, LinkedIn and Instagram, to catch all the updates from the world of stock markets. Many thanks for tuning in. Until then.